The broadcast is now starting. All attendees are in listen-only mode.
I'm now going to introduce you to Paul Barnaby, a chartered accountant and the regional consultant for Plan Guru, who is going to talk about budgets and cash flow forecasts. So I'm just going to switch across on the change presenter. So how are you, Paul?
I am really well, thanks very much, Peter.
Okay,
I'm just
transferring it to you, so it's over to you. Thanks, mate.
Okay, there you go. So thanks very much for that introduction, Peter, and welcome to my segment today on how to prepare proper three-way budgets in under 60 minutes. And while that might sound like a bold statement, yes, it definitely is possible. So just a little bit about me before we really get into the meat of it. As Peter said, I'm a chartered accountant. For a good number of years, I was managing partner in a second-tier firm in Wellington, New Zealand. And before you get going on the Bledisloe Cup jokes, I do have dual heritage, so I get a bob each way. During the time that I was in that general practice, I developed what has become a passion, but actually a 20-year specialty in what I call predictive accounting. And predictive accounting is nothing more or less than doing in the future what we already do for our historic accounting. So it's the same thing. Of course, it embodies financial analysis and strategic planning. So that's part of the briefs that I have. And of course, budgeting and forecasting, including cash flow. So my consulting practice that I have is styled Beyond Accounting Technologies. And as Peter said, I'm also the regional integration consultant for Asia Pacific for Plan Guru. And Plan Guru is a firm based in the US that provides tools for this actual process. And although they're based in the US, Plan Guru is used in around 50 countries right around the world. So I personally have consulted to, supported, helped and trained many hundreds of CFOs, accountants, business managers in this area. And I see my role as helping accountants and CFOs look like superstars. So just what I want to talk about a little bit today is the need for strategic plans and budgets. Because I know Peter's topic is corporate governance, but this is an essential part of good corporate management. And there's an old saying that goes, if you fail to plan, you plan to fail. Now that's a pretty old saying, but it's just as true today as it was when it was first invented all those years ago. Because it's an absolute fact that businesses who have a plan will be more successful than those who don't. I speak with a lot of businesses in the course of my work, and I ask them, how do you plan to grow your business? Are you planning to grow it? And they often say, yes, we're going to grow organically. Well, all that means is that they're going to grow like a plant out of the ground. But unless you have a plan, like water, then the plant's not going to grow. Because if you set financial targets and then measure the actual result against those targets, you will be more focused on the strategies that contribute to success. On the other side of it, if you don't have the targets, your strategic ideas will be a bit more hit and miss. So again, I see my role as helping you or your company or your client operate like the big corporates, all of whom do this. And the way I will do that, or can do that, is to help you implement these time-tested methods by preparing your three-way budgets and forecasts and that's where my help comes in. So you need a budget. What do? You reach for Excel, right? Wrong. Excel is a great tool, but it was never ever built with budgeting in mind. Spreadsheets are great. I have used them for many, many years, but Excel was designed for not only accountants, but engineers, chemists, designers, you name it, everybody that can get their mind around formulas, but not built for budgeting. And if you are saying, well, so what? Have a look at this. There's a fellow at the University of Hawaii called Ray Penko, and he's published not one but 2 international research papers into spreadsheets, Excel files, etc. And he's discovered that 88% of all the published spreadsheets that he analysed had errors that the authors did not know about. I repeat, did not know about. And so there's all these spreadsheets out there that have got mistakes in them and people don't know. But if that doesn't frighten you enough, think about this. Excel budgets, to do what I'm going to show you today, take 10 times as long to prepare as by using a purpose-built tool. So why would you bother? There are a choice of applications out there, and all I can suggest is that you choose the best that suits you and your situation, and are the best for technical and cost reasons. As I said before, I'm the Regional Integration Consultant for Plan Guru. That is my selection, and with the years that I've had in this business, I know what works and what doesn't work, and Plan Guru works. So what are the key aspects of a successful budget? Firstly, they must be 3-way. Just having a sales forecast or profit and loss on its own is not enough. You've got to do balance sheet as well, and if you do profit and loss and balance sheet, you'll have associated cash flow. You must start with known data. In other words, the historic results, your latest financial published accounts. And a successful budget has to be driver-based. When I first learned budgeting, we just used last year plus or minus a bit. That's not budgeting, that's guessing. You've got to look at what drives the business. Is it the number of products that you sell? Is it the price that you sell them at? Is it the number of customers that you've got? Is it the terms you give your customers? Is it the investment you've got in R&D or fixed assets? Is it the terms you get from your own suppliers? Those are all what I call drivers. You must also be allowed to look at budget, actual, and forecast, because those are 3 different types of data. And obviously, variance reporting is a must. You must be able to compare what you budgeted using those drivers that I mentioned and the actual that comes through your accounting system. And other reporting has to be flexible and able to be configured to produce reports that you want. Not what the software provider wants you to have, but what you want. So let's go and have a look at a budget. I've already got one prepared, and I'll just go and open that now. And the model that I've got is a computer reseller. And I've got a budget opened there, and you can see that they sell computers, hardware, printers, software, and accessories. If I scroll a little bit across to the right, you'll see that I've got the results by groups of products, and I can total those up if I want to just look at the group totals or look at the individual lines, and you can see they've got a budgeted revenue of around 3.5 million. How have I done those sales lines? I've used the drivers. I've used quantity. So there is a table of the quantities that I've used, 147 units a month in low months and 293 in the high months. And then I've linked that to the line in the revenue statement by just putting in a price, in this case, of $500. Okay, so that's the way I've had the driver for the units sales. Cost of sales I've done on percentage. you'll see there are the operating expenses, and we're looking at a net profit before tax of around 300,000 for this company. Here is my balance sheet budget, and you can see I've also got that month by month, and because I've got profit and loss and balance sheet, I also get cash flow. So here comes the cash flow report, and I won't bore you with the details of it, but you'll see there it starts from operating revenues and works through to operating cash result, looks at things like investment and financing to give you an end cash result. So you can see here I'm forecasting a surplus in August of just over 3,000, in September of 67,000, and then a larger surplus going on further. I mentioned we must be able to do variance reports. There is a variance report for December and year to date. So I've got budget, actual, dollars and dollar variance for December, as well as percentage, and then year to date I've got budget, actual and variance. If you really want to get smart with your reporting, Plan Guru comes with an advanced reporting add-in, which I'm showing you here now, and I've actually done a budget versus actual versus forecast report there. Same data, just pulled out in a different way, and then comparing the actual result that we attained against the original budget and the revised budget or forecast. And then I've got a variance budget to actual and a variance forecast to actual. Plan Guru also comes with a cloud-based reporting tool called Plan Guru Analytics, and I'll just show you that here. And this is a method by which you can share the output of your budgeting system with your company directors, colleagues, or whoever. Anybody with a smart device can log in securely and have a look at these reports. I've got a dashboard there. You can have a scorecard as well, or you can have quick reports. So Peter, there in about a 10-minute nutshell, I've given you my thoughts on the process of budgeting, profit and loss, balance sheet and cash flow. So I'll now hand back to you.
Yes, Paul, thanks very much. That was very interesting, and in the subsequent presentations that you're going to make in Corporate Governance Network, you'll be able to take people through this process in a bit more detail, won't you?
I will indeed. I'll show the whole process of developing a budget from scratch to the level of detail that I've shown you here this afternoon.
Yeah, just do you or Plan Guru actually conduct like a training session for company directors as who might not want to actually prepare budgets but would like to understand the process in a bit more detail?
Absolutely, we'd be very happy to do so.
Okay, that's interesting. So for the participants, the people who are subscribing to this series, can you please bear that in mind if you do need some mentoring on the actual budget cash flow preparation process that your accountant might be doing, but as a director you need to understand that because ultimately you're the person that's responsible for it. Paul's able to give you some training courses on that so you understand how this process works. So thank you very much, Paul, and we're now going to switch back and we'll talk to you later on. Thank you.
Thank you.